People from the Holy Nation, Wagwana, the Macol Military Panditing, better known as the Heistmaster of the Heistfxacademy. We keep it simple, nice and easy, and does not get any much better than whatever we usually do upon the academy. So, in today's class, we are going to learn more on draw of liquidity. First, what is liquidity? You're about to find out. If you don't know, then you're just about to know. Now remember, real men don't lie and talk. That's why we always come to live from the Heistfxacademy, and it is only fair if you also subscribe and turn on the notification bell so that you can be notified each and every time I'm about to drop another amazing video like this one here. Now straight to the charts without wasting more time panditing. Now, whatever you can see here is analysis that we are done, but on explaining more on how liquidity works in the market. Remember, me always tell you the Heistmasters that how the market usually moves by first generating liquidity in the market, and again, secondly, by targeting liquidity in the market, and again, third, by filling the areas of inefficiency or doing mitigating, filling the areas of inefficiency in the market, and again, now lastly, going back to the balancing the equilibrium in the market. Here now we have the four ways of how the market moves in relation to liquidity, and that is why today's lesson gonna be hotter than lava. You already know. Now before we can go deep, let me delete whatever you see here so that we can now start our fresh analysis and build a footprint or a roadmap of activities we are looking to trade on. This is the US 100, better known as the NASDAQ, so that we'll be looking to participate upon the market from next week. Yeah, now be sure to stick up to the end, and as I'm deleting this, you can use these seconds to subscribe to the Heistfxacademy. And if you're also looking for the best broker mana global, remember the link is always in the description. So as I'm deleting these ones, you can use this minute to also sign up to the best broker mana global. You already know them are called the just markets. Can you down know? Yeah, simple, nice and easy. Now I'm about just a minute of your time, people. This is gonna be one of the best liquidity classes from the top. Chief Panditing, you already know, does not get any much better than this. All right, now we are done. Remember, this the one that I'm not going to interfere with is the trade analysis for last week, where I made a video of a top-down analysis. Remember, I always analyze the market from top to down analysis, whereby you can build your daily bias and then read the market structure or know where you want to trade this market from the bigger time frames, and then go to the lower time frame, for example the 5 minute and the 1 minute, so that you can know the intentions of the market. Remember, a 4-hour candlestick cannot happen if you have not seen the earlier intentions of the market, building those small price action from the 1 minute to the 1 hour, and then now we have a full 4 hour. Yeah, so it is only fair if you also know how to analyze the market from the lower candlesticks or from the lower time frames, because at the end of the day they are the primary drivers of the market. Yeah, now from last week's video, whatever you can see here, the Heistmasters, me always going to keep it simple, nice and easy. And from this class here, whatever you can see here, now we had a moment in the market where we had a bullish, a bearish order flow of this market, and then after we had a shift of structure there, the market now shifted to a bullish market all the way, and we always explained this in the previous video. And then we had the market dropping all the way to this fair value gap there, and it is from that area there where we see the market again respected that area there, and it is like building a bullish footprint in the market. Now we want to read this bullish footprint and know what is this market going to do after it has finished this phase of accumulation. Yeah, we always say we have the power of 3 in the market: accumulation, expansion, retracement. Or the market can do accumulation, distribution, and again accumulation, manipulation, distribution, or accumulation, expansion, and then it comes back to the same place where it was. Yeah, now in this an area of consolidation. We want to see after this market finishes this consolidation, are we willing to continue buying in this market, or we are expecting a temporary pause of this market to do more of like a bearish flag so that we can continue selling down. Now let us now narrow down to whatever you can see here. Build a footprint of activity, utilize a liquidity, see the areas of liquidity or inefficiency in this market so that we can know where we can now be willing to enter this market, yeah, to be crediting out of the market, as we always say, pandating. Now what can you see here? Yeah? Now the first victim in our analysis today comes about this sweep of a sell side liquidity. Remember, today whatever I'm going to talk about is liquidity and sessions and simple, nice and easy, yeah, and maybe supply and demand, because those are inevitable in the market here. Yeah? Now from whatever I've just drawn here, whatever you can see here, the market came. Remember, we were in supply. Out from the last week's video of a top-down analysis, we were targeting to buy after a change of character from the 5 minute or the 1 minute from this area. We targeted the market to go to our supply. And once the market comes to our supply, what do we expect? A selling power in the market. Remember, supply, we are selling. And from a demand area, now we buy. Yeah, now because this was supply, we want to look where is this market going to sell to. Yeah, now after this supply, we see the market dropping down and took this sell side liquidity that we have at this area here, or swept these lows here. And this is a sweep or is a wipe of a market because we don't have a body candle close below that area there. We basically have a wick. We wick the stop loss below those areas there, and then where is the market going to target? Buy side. Yeah. Now it is from that area there that now we target our buy side. Remember, after now the market has taken the sell side, now we want now to sweep our buy side. Now let me use this as maybe sell side, because we are basically going to talk over liquidity terms. Yeah, now we can use that as our sell side liquidity, or just liquidity in the market. And this now is a clear area of buy side. Yeah, now that is a clear area of buy side. Simple, nice and easy. And remember, this buy side is coming from an area where we have supply from the left, so we have a lot of stop orders in those areas there. That is why the market is interested to come to those areas to first do what in the market we usually call a stop hunt, or to take the buy side. And you have seen after the market came to those areas of supply and to take those buy side liquidity there, we had a long rejection candlestick from there, which them are people call a doji or a rejection candlestick. You can see how a massive rejection candlestick from those areas there. Yeah, now if you understand what the market is trying to do by just understanding the target of liquidity from these areas here, you can identify that we have a buy side there and a stop hunt there. And this week is not going to shock you in the market because it is something you expect. All right, now after sweeping the buy side liquidity, remember, as the market was buying, as the market was going to take the buy side, it always leaves behind areas where finally it will be interested to come to. And where are those areas? Let me show you in a few. Yeah, now it is at this area there that you take now your trend line liquidity, and this is the low that the market left behind. We are just going to stretch it. Remember, this is the 4-hour. It is going to get hotter than whatever we are doing at the moment. Yeah, so make sure you pay attention and listen to the Heistmaster until the end. Are we together, the Heistmasters? All right, now after the market took the buy side, and after the market did a stop hunt, it came down. And remember, we have had an area after now, before the market took the buy side, a consolidation phase in the market. Yeah, and it is from this area here that I'm going to turn on my session indicator so that we can go and learn deep details how we are going to use these liquidity terms, or analyzing the market using liquidity in relation to different sessions in the market. Remember, we have like 4 sessions. We have the Asian ranges there, and then London and New York are the major areas, or where we could like now to capitalize these big massive moves in the market. All right, panditing. Now, after the market came and wicked below this low here, whatever is there, whatever is at this place here is the same exact thing that you see at this area here. Remember, we had this wick here, which was the last area in the market before the market went with this bullish candlestick and took the supply. Leaving that aside, you come to this area here. This was the last bearish candlestick before we had this bullish candlestick, which went all the way to sweep the liquidity above the supplies and to take the buy side liquidity. And the market came and swept that low from the bullish candlestick, and at this place here the market came and swept the low of this bullish candlestick before reversing again. Are we together, the Heistmasters? Simple, nice and easy. After the market swept that area there, before we go much into other details, now this has been analysis of the 4-hour. We have built a footprint, and whatever we have seen in this market is the market building a price action which is more of a bullish price action in the market, or a bullish order flow in the market, because you have seen liquidity is generated. Liquidity is generated at this place here, and then we have the inducement. We push up to take the buy side liquidity. Yeah, liquidity is generated here, we induce it out and push upwards. Yeah, what again do we expect? Liquidity is generated here, we manipulate, we induce it out, and then we push upwards. Now, to break the supply, remember, we are respecting the 4-hour bullish fair value gap. Are we together, the Heistmasters? Panditing. We now don't want to waste much time, but to quickly turn to the 1 hour so that we can see what the market has in store for us. Yeah, simple, nice and easy. I think you people are now seeing where we are heading to. Yeah, now, my people, what can you see from the 1 hour? Yeah, after now this trade here, whatever we can see here, we have a formation of equal lows somewhere. Somebody will ask me where. That is why I want to draw it exactly so that I cannot confuse the Heistmasters. Are we together? It is at this place here that I've just drawn it. Yeah. So you can see a clear formation over equal lows at that area, and that is a target of liquidity. That is why I'm going to draw it with dollar signs. Yeah, so that I can keep in mind we have a liquidity build at that area there where the market can be interested to come to at any given point in time. Are we together, the Heistmasters? Yeah, that is whatever we can see from the 1 hour. And where is our buy side? At this area here. Yeah, now if we are analyzing the market from these areas, we want to mark each and every point out. Yeah, now where is our buy side? This was the last place there. There, we are going to mark it out as our buy side. Yeah, as our buy side. That is an buy side. And remember, these areas are marking, they are going to play a major role as we are continuing shifting down to even the 1 minute. Yeah, so that is why I'm highlighting these major key zones from the bigger time frames, so that as I am dropping down, I can identify and know the real intentions of this market. Yeah, now let us mark that as our buy side. As our buy side. Yeah. And then because we were in our 4 hour, let us now stretch it to cover those areas there, and we keep it simple, nice and easy. Now from the 1 hour, we have identified our sell side by the formation of equal lows. As the market was moving upwards, we had areas left behind where the market could be interested to come to. Yeah, and we have a buy side where the market could target to take it out. Yeah. Now, the importance of marking these things from the bigger time frames is when now we are going to narrow down to the lower time frames, we are going to turn on our session indicator in relation to what we have in the market. What is the session going to tell us at these key moments in time? It is at that time where now we narrow down further to the 15 minutes. Yeah. Now, what are we seeing, people, in the 15 minutes? In the 15 minutes, a lot is going to happen in the 15 minutes. But before we can come to that a lot, I've seen an area in the market where I always refer it as an order block, a 15-minute order block, or an area of demand which led to a break of structure. People will ask me, Master, where is that area there? Then it is at this moment that I'm going now to remove my order block there and then explain in a few. Why am I referring this area as an order block? Or why am I referring this place as demand in the market? Remember, I told you we are going to discuss liquidity in relation to maybe supply and demand, because those are the things in the market you cannot look down upon. Yeah. Now, when you consider on a closer look at this candlestick here, remember this market, we had a massive sell from where? Supply. And the market how usually moves from supply to demand, from demand to supply, targeting the liquidities in the market. Are you now starting to see where we are heading to? Yeah. Now, after this massive move of supply, we came to this area here, and from this area here, we swept liquidity of the 4-hour low, which was printed at this area here. That is why I have it marked, so that it can keep remembering me that there was an activity which happened at this exact place there. Yeah. Now, this candlestick here swept the liquidity of the previous candlestick. That is the first confirmation of a valid order block in the market. Yeah. Has it swept the liquidity of the previous candlestick? Yes. Yeah. Has it led to a break of structure? Yes, definitely. The buy side liquidity, and we have candlestick close above those areas. Yeah. Now, that is a valid break of structure. Do we have a fair value gap in that candlestick which has not yet been mitigated? Yes, of course, we have this area here. Yeah. Now, this is an area in the market where we are interested because we have orders at that area there. This is an order block. So we have orders pending at that area there, and the market usually comes and fills the orders before we can move to the next phase or to the next area there. And this is a strong order block because above it we have a sell side liquidity formation of equal lows, which are going further to attract the market or the price to those areas there. So it is a confirmation, and it is a strong build up of confidence in the market, which are confirming to us that eventually the market is coming back to respect this 15-minute order block that we have at this moment here. Yeah. Now, it is at this moment that I turn it to a blue. Let me make it blue because the yellow one is for supply, so that you cannot confuse yourself and make your presentation look good. You just don't want to have random lines in the market and a chart which is dirty. Yeah. You need to make it simple, nice and easy and clear as my chart here. Yeah. Now, this is the definition of how you read the intentions of the market from the bigger time frames. Remember, now we are in the 15 minutes. Keep in mind, we have not yet come back to the 1 minute. So that is why it is important for you to watch this video until the end without skipping any part, because you are going to learn. This video is full of knowledge and valuable, the Heistmasters, and that is why I believe all of you watching up to this area here have already subscribed and gotten your accounts with the best broker manner global. Does not get any much better than that. Yeah. Now, if you understand how now to read the market this way, you already have yourself the best broker manner global. Then what is preventing you from being or from being able to get money out of the market, working with the best market conditions? Yeah, does not get any much better than that, the Heistmaster. So I've given you a short break there to synthesize whatever we have talked. Those few seconds you can use it to subscribe or locate where is the link to the best broker manner global before we can continue now to the 5 minutes, because you are not ready, my people. Yeah. Okay, now let us go to the 5 minutes, because I've seen most of you are already cooperative. Yeah, that is why I love the Heistmasters so much, and I don't take it for granted for the support. Thank you first for 6,000 subscribers, and remember, by the end of the year we can make it up to 7,000. Yeah. So that is the power of the Heistmasters and the Heistfx community. Does not get any much better than that. Now, somebody can ask me, the Heistmaster, where are we? Now we are in the 5 minutes time frame, and it is now at this place in time where I'm interested to now turn on my session indicator, because I've been telling you people, before we can now turn on my session indicator, let me take you quick to a smaller theory of the power of 3 in regard to the session trading. Yeah. Now, whenever we have each one pretty much understands this: accumulation, manipulation, distribution, or accumulation, expansion, retracement. Now, this is the exact thing or scenario that we want now to look when now I'm going to turn on my session indicator. Yeah, now these are the Asian ranges. Oh, I could better use the path instead of the trend line. So these are the Asian ranges here. We have the market doing a consolidation phase there, like this, building. I'm not so good in drawing, but at the end of the day, you already understand what is taking place there. Yeah. Now, those were the Asian ranges. And then if this market is in a bullish momentum, we expect as London opens, we manipulate the lows of the Asian ranges. Yeah. Now, let me just leave it at there, and then now I mark my Asian highs. These are the Asian highs there, ranges, and I can name it the Asian highs so that we cannot forget Asian highs. And then I can drop down here and mark these Asian lows, the Asian lows. Yeah. So what I'll be looking for when we are going to enter London or New York, areas where in the market we have now much volume in the market, I'm now going to look for a manipulation to either side before I can target the other one. Remember, if we have this as the Asian highs at that area there, I can also refer it as our buy side liquidity in that area there. When we have these Asian lows, I can also refer it as the sell side liquidity. Are we together, the Heistmasters? So upon London open, if this market is bullish from the bigger time frames, yeah, so I can wait for London to do a manipulation of the Asian lows like this, and then give for me an entry model, yeah, which is an initiation or a change of character comes to mitigate those fair value gaps or areas of inefficiency which have been left behind, and break structure again, and from that area there target the to take now the buy side or the Asian highs. Yeah, and then as New York opens, it can continue pushing upwards or can just come back and the rest continues. Simple, nice and easy. Now this exact model that I have here is the exact one that I want us to discover when I'm going now to turn on the session indicator. Yeah, now let me quickly delete it so that I like having clean charts. Yeah, rather than just having random things in the chart which can confuse you. Yeah, because each and everything that I have marked here, we can explain it, and it is something that it is bringing itself right. Yeah, now this is the session indicator right away with me here, and let us go way back. We don't have to rush anything in the market. Now let us start this analysis of now with whatever we have highlighted from the 4 hours in relation to the session indicator and see if it is making sense. Remember, I'm trying to teach you people, the Heistmasters, how to do alignment of liquidity from the external to the internal, from the bigger time frames to the small, from the bigger time frames to the smaller time frames. That is what is called alignment of liquidity from the external to the, from now internal to external. Yeah, now you use the earlier intentions of the primary drivers of the market, which are the lower time frames, to capitalize on the bigger moves as you are targeting from now moving in from the internal liquidity as you are targeting the external liquidity, which is the highs or the buy side liquidity or the extreme sell side liquidity in the market. Simple, nice and easy. Now, in last week's video, how we explained that this trade, the trade came all the way to our supply, and from supply we expect this market to sell, to either take out sell side liquidity or go straight to areas of a demand or to an order block which was left behind in the market. Yeah, now from this area, this market, after coming into our supply, we had the Asian ranges. Remember, this is the Sydney and this is Tokyo, right about that area there. Yeah, now these were the Asian highs at this line that I've drawn there, and slightly below it we had our sell side or the Asian lows there. And what did London do? As London came in, we had it taking the Asian lows there, and it went back and respected these areas here, and it is from that area there now, as New York opened, we see now that flow of a bearish massive move to take the liquidity, to now sweep the liquidity of the 4-hour low. Yeah, now after taking this liquidity of the 4-hour here, it is now at that area there that we created an order block or area of demand, and then from that area there we had the market. As the market came from that area there, remember now from supply we could look for an entry model to now to target these areas over to sweep liquidity here. So but because we have not traded from that area there, after a sweep of liquidity from the 4-hour, we could now look for a buy model to now target these areas of supply. Remember, we have a lot of stop losses above these areas here, yeah, and we are again above that area. We already have our buy side liquidity at that area there. So what do we expect to be taken out in this particular place? Buy side to be taken out and to come and hunt for stop hunts above the supply area there, because we do not have any weakening in that area there, or we have not weakened that place there. So definitely now from sell side liquidity or from now areas of demand, we can now target that area there. Now you could look for an entry model from the 1 minute or from the 5 minutes there, from this particular place to now target those areas there. Yeah, I'm going to come to those area, to those entry models now when we go further down. Yeah, now the 1 minute. After this area here, this is the first change of character we see here, and now the market is like now confirming to us that it is just about to now turn bullish. Yeah, because we are now respecting this low here. And now what the market is doing is creating this like a higher high, higher low, respecting this area here. Now this becomes an higher low and breaking structure above that area. They are confirming to us we already had a shift of structure at that area there. Yeah, now we have a break of structure at that area there, with leaving behind big areas of inefficiency in these areas here. Yeah, now we have a lot of our fair value gaps there. Now after a massive move like this one, we could wait for the market to come. Remember, if you bring your Fibonacci retracement from this low to the high, you want to see the market coming back to the extreme discount so that you can trade onwards to now target the buy side or continuing upwards. Yeah, remember to buy low and sell high. Yeah, now from that area there, you could maybe put your stop, you could put your orders at that area there. For example, you could put your entry from that fair value gap there and put your stops slightly below that area there, because if the market comes and sweeps that low there, it has violated that buy model that you are looking for in the market and target the buy side liquidity. Remember, the market is in a consolidation phase from the bigger time frames. Now, this is an entry model for those who want to utilize the intra-session volumes, yeah, or who want to utilize the scalping opportunities we have in the market. And remember, we are still in a New York session, so we still have volume in the market. Yeah, now this one, eventually you see that model went on and took our buy side liquidity there. Yeah, but we keep it simple, nice and easy. Now that was our first entry at that area there. Yeah, and again, now from that day ended there, the market consolidated there, and we had it closing slightly at a drawdown before we proceeded to the next day there. And from the bigger time frames, remember, we had our buy side liquidity marked at this area there. What is common between this buy side liquidity and this place that you are seeing here? Yeah, now this is the Asian high. Remember, this is Sydney and this is Tokyo. What are they? The Asian ranges. Are we together, the Heistmasters? These are the Asian ranges there. Yeah, and it is at those Asian ranges that we have our buy side liquidity there. And at this area here, we already marked our sell side liquidity. Yeah, now as the market was coming up, we had it consolidating in these Asian ranges there, and whatever we wait for is London to manipulate one side so that we can target the next one. Yeah, and what do we exactly see at London? These areas here, London opened at this area here, meaning the lows of this Asian ranges were at this area here. This was the lowest point over the Asian ranges at that area there. Yeah, so we can name it as the Asian lows. Yeah, Now, at those Asian lows, whatever you can see in London, London came in with that manipulation. You can see those big candlestick, momentum or institutional candlestick. They are like stretching to reach out to something, to take the Asian lows before now we can target to take the Asian highs or to target the extreme buy side liquidity and again target the stop hunt above the supply that we have from our left. Are we together? The Heistmasters up to that level there, yeah? Now it is at this area here the market came and took at now London, took now that those Asian lows, went up to confirm for us. Now we are like respecting these areas here and now we are expecting the market to continue pushing up, and again it came and made equal lows, leaving an area of liquidity back again in the market. And remember, below that area there over these are equal lows, below it we have a strong area of order block, meaning this market is going to come back to this area here, yeah? Now after creating those equal lows at that area there, the market went on and broke structure there and targeted to take out now the buy side liquidity. These are the Asian highs at this area here. Now let me mark this as the buys at the Asian highs, because we have these are the Asian highs, because we have our buy side liquidity, our extreme buy side liquidity in those areas there where we also have supply from the left here. So after coming to that area there, when you go to the 1 hour, for example, this area here where we have this formation here can be left behind as a weak, meaning we came to do a stop and take the buy side liquidity in those areas there. And what happens after we have taken those things there? Now it is at New York Open. Are you now starting to understand this market, how it flows from where we started from? Yeah, let me go back. Let me go back to this area here. Now it was giving you another second to subscribe for those who are not subscribing yet before you can continue here. Now it is now at this New York session, after now taking the buy side and after taking the Asian highs, what is left behind in this market which the market has not taken? We have areas of sell side liquidity that has not been taken, and below it we have an order block in the market where we can use it as demand in the market. And we expect the market to come to those areas to fill the pending orders in our order block there. And what do we see? Immediately after taking the buy side liquidity there, the market came in at New York session with big volume and the candlestick there to target now the order blocks at this area here and to take out this sell side liquidity that we had left behind as the market was moving up to take the buy side liquidity and straight to our order block at this area here, yeah? Now from the 1 minute, this again could offer for you a good entry model to take this trade from here and now target this area here, yeah? Now this is a 5 minute. Let us go to the 15 minutes and see where we could target when the market came to our order block there, yeah? Now let me delete it first. Let us now come to our extreme order blocks here and see. Where we could target. Are we together, the Heistmaster? We always keep it simple, nice and easy. All right? Okay. Yeah, now from those areas here, remember, where do we have now buy side has been taken out, and this is the last area in the market. Let me go now to the 1 minute and see. There's something I'm trying to look for, which is going to guide us. That is why we always read the market from the bigger time frames to the smaller time frames, so that we can see clearly whatever is happening in the market. Yeah, now it is clearly now showing itself here. Now as this market is dropping down from the 1 minute, where do we have this massive supply coming from? You can see this order, these big candlesticks that we have here, which led now to this massive supply in the market, which led to breaking all these lows there. Yeah, now we are interested to mark that as our supply level. Yeah, now that is why it is crucial to understand or to now learn how to identify whatever is happening in the market from the bigger time frames onwards, even to the lower time frames, because it is only in the 1 minute that I'm able to identify those areas of supply. But now from the 5 minutes and the 1 hour, whatever I'm seeing there is just a week. It's just a week left behind by the market. Yeah, are we together, my people? Now, from those areas there, remember that is an area in the market where we had now supply coming in from, and that is why I'm going to mark it as supply so that we cannot confuse ourselves as if that is another demand there. Yeah, we're going to put it at supply, which led to this massive selling in the market, which went straight to this our area of demand here, or to an order block here. Now after the market came here, you see it were moving upwards, and after moving upwards there, you see it coming back, respecting those areas there. And as this market was going to break this structure here, this market already is confirming to you a reversal. Yeah, now then we could use that as an entry model, a confirmation, other than just taking it from this order block. You want first to confirm that now the market is reversing. Yeah, as shown you the confirmation with the stops slightly below those areas there. And now where are you going to target? The supply. The supply. And remember, you are still in New York session, so there's nothing bad trading at that particular point in time. Remember, we are still trading inside the session. Yeah, we are only not going to trade this market at the Asian session, because we expect the Asian ranges and to read this market structure from there. Yeah, now as the market, you can see this could be a good risk to reward, a 1:3 risk to reward ratio. Yeah, so from that particular area there, the market, from there we see it moving all the way to supply, and it is from that supply that we see a series of consolidation in the market, and the market was consolidating there. And remember, this consolidation is happening as a result of now the volume is ending, and we are almost now coming into the Asian ranges. Are we together, my people? Yeah, now at this area here, we are now in the Asian ranges. Let me go to the 5 minutes. We are now in the Asian ranges. Are we together, my people? Yeah. Now you've seen how this market behaves. Simple, nice and easy. You don't complicate anything at this area here. Yeah. Where are we analyzing the market from? From that area there. Yeah. Let me just leave it at that area there where it is at the moment. Yeah. Now you see now from the 5 minutes, whatever you are seeing there is just a body, a big body with a wick above it. But then when you go to the 1 minute, you can see that area, the exact area of supply in this market. Yeah. Now at this particular point in time, remember we have our supply there. We have our supply there, and now these are the Asian ranges. Yeah, we are now going to mark them as our Asian high. Remember, whatever I'm doing here is the exact thing I've analyzed and did from the previous days. Yeah, we have our Asian highs there and our Asian lows here. You see, these Asian lows are a good formation of a sell side there, a formation of equal lows to be taken out by the market. Yeah, now we are going to mark those as our Asian lows, and there above it, those were the Asian highs. The Asian highs. And how do we know it? By this session indicator, which is telling us the Sydney and Tokyo, those are the Asian ranges. Yeah, and from our model, we usually wait a manipulation from one direction and then we target the next one. Yeah, now remember, we also have this supply area there from the left. We can as well stretch it all the way. We can as well stretch it all the way to those areas there and keep it simple, nice and easy, so that we can have ourselves building a good above or below these areas of Asian highs and Asian lows. we usually have a build of liquidity above those areas there, and you can see above these are the Asian highs. I've named it the Asian lows. Let me name it the Asian highs. Above it, we have an area of supply where from the left, where it has been an area of supply. Though the market tapped into this supply, but we have not wicked above those areas of supply. So it is an area in the market where we expect this market to come back to and take the stops above the area of supply. This exact model here is the exact model that I was discussing earlier in the video, whereby we had supply and a buy side liquidity where we expected the market to come and take the stop hand above the area of supply. Yeah. Now, when London opened, whatever you can see here, London came and manipulated and took the lows with this big momentum candlestick, which are acting like they are stretching to reach to something in the market here. And again, we see another build of liquidity at here, a formation of equal lows. So this is another confirmation in the market that the market, remember, we are now building a bullish bias in the market. Whatever you are seeing in the market is a consistent building of liquidity in the market, inducement and pushing upwards. For example, build of liquidity, the market comes and takes it out, inducement, and then a push out back to break structures above those areas. Yeah, whatever you can see at this place here, a build of liquidity, market comes and takes it out, inducement, and then a push out to those areas there. Yeah, now whatever we have here for the market to now expand from this consolidation from the 4 hour, the market has this extreme area of liquidity left here. We can name it as liquidity, as we are now coming to almost the end of this video. We have those areas of liquidity at that area there, and remember, we also have massive candlestick at these areas here, which are unmitigated yet by the market, and we also have this extreme low of this order block, which the market has not come yet to those areas there. Yeah, and again, coming from that area there, whatever we see is London came and took the Asian low and again went and took the Asian highs and tapped into supply again. Now, when it tapped into supply, we see a sharp reversal again to take this. Remember, as the market is pushing up, we have it leaving behind areas of inefficiency where it will be attracted to. Yeah, we have it leaving behind these equal lows here. After the market took supply, it came down all the way to these areas, and again, those you can see them as areas of liquidity left again by the market, because we have areas of liquidity left here by formation of equal lows, and below it we also have a formation of equal lows, and below it we also have a formation of equal lows. So we already understand, before the market can break structure and continue pushing up, if at all the market is to continue pushing up, the market has first to come and take all this liquidity left behind in the market. You can see again another area here which the market has left behind, and again we have another area here where the market has left behind with a formation of like equal lows there. So we have a lot of sell side liquidity left behind for this market to come and take it out, so that we can have now that big push to expand or to now move from this 4 hour consolidation and now target where we could want to trade this market from. Now, you've seen, let me go now to the 4 hour. You've seen how we have comfortably analyzed this market from the 4 hour all the way. Let me now remove the session indicator because it is making a lot of noise in the 4 hours. Yeah, now we have our clean analysis of this trade here. Yeah, now we have this trade respecting this bullish fair value gap there. We have this market constantly doing build up, inducement, push out, build up, inducement, push out, build up, inducement, push out, building a bullish price action. That is whatever we can see here. Yeah, and we have areas from this 4 hour where this market can be targeted, where areas in this market where this market can because we have this doji candlestick there, and then we had this like a bullish candlestick continuing like pushing on Friday before the market was closed. Yeah, so the market can be targeting these highs here, or to now go and break structure and form the highest high. Yeah, or this can be a build up there, leaving all these areas of inefficiency, all this sell side liquidity that have shown you, for the market to come and take them all out, because you also have areas of sell side all over. Yeah, so that the market can continue falling down. Yeah, now if you want to know where the market is going to, remember we already have our bias, but we need first the market to take this sell side liquidity, gives us a clear confirmation if this market is going to have a clear change of character, so that we can now target these areas here that we have here as resistance over there in the 4-hour, or now to break structure above those areas there. Yeah, so it is as simple, nice and easy as that. Yeah, and this is how we usually keep it simple, nice and easy under the Heistfx Academy. Yeah, so hope the Heist Masters under the Heist community, you have gotten value from this video. Yeah, I'm never afraid sharing knowledge, because knowledge is power at the end of the day. Yeah, this one candlestick can make you a fortune. So it is only better if you understand how to analyze it, and then wait until this setup comes to you, so that you can know where exactly you want to execute your haste from, and break the thing out of the market and bank out money out of the thing at the end of the day. So it has been the Heist Master. Hope you have all subscribed and made yourself accounts using the best broker, Mana Global, and now we simply wait and until the market now opens, so that we can look for buying opportunities or selling opportunities, or what the market is in store for us. We have clear areas backed out and pending, waiting for the market to open, so that we can know exactly what you are expected of us to do in the market. Until next time, my people, Panditing, peace out.